Like and subscribe to my channel and click the bell icon to get new video updates.
Analysis. Hindenburg gives a master class. Adani Flunks without putting a single dollar in the Indian market. A short seller from New York managed to torpedo the country's most prestigious stock sale and dampen the aura of invulnerability around his sponsoring tycoon. Such is the power of limitless money, it can drag the ladder of the world's greatest fortunes from a distance of 8,000 miles. By winning the first round of his bout against Gautam Adani, Hindenburg Research has given us a masterclass in financial globalization. Late Wednesday evening in India, Adani Enterprises Limited informed the exchanges that it had decided not to proceed with the $2.4 billion public offering completed the previous day. The success of the last-minute fundraising plan, which was launched with the help of Abu Dhabi's royal families and family offices of other Indian billionaires, couldn't prevent the stock from plummeting 28% the next day. Seriously, as such, the board felt it will not be morally correct to proceed with the issue, Adani said in a statement. Subscription monies will be refunded. For me, the interest of my investor is paramount, said the 60-year-old CEO in a video address to the shareholders. When Hindenburg released its report last week, which accused Adani of the biggest fraud in the company's history, and disclosed bets it had made against the group via US-traded bonds and non-India traded derivatives, the Indian infrastructure conglomerate rushed to deny allegations of stock price manipulation and accounting fraud as baseless and timely to thwart the country's largest follow-up IPO. So the stock sale became the referral event to test Hindenburg's skills against the power of a wealthy industrialist. Adani was a 100 billionaire until recently. But his defenses collapsed, exposing investors to the information overload of a 413-page rebuttal didn't work. Nor was the group's rousing call for nationalism, which equated Hindenburg's attack with one of the lowest points of colonialism ever. The 1919 massacre by British soldiers of Indian civilians gathered in a Punjab park. The stock didn't hold up, but neither did Adani. Keeping the offer open longer or lowering the price risked embarrassment. So he rammed it through on Tuesday with the help of fellow billionaires. Individual investors took up only 12% of the shares reserved for them. A barely successful stock sale had the opposite of reassurance. Notably, after reporters from Bloomberg News in Hong Kong and Singapore broke the news that Credit Suisse Group AG had stopped accepting bonds from Adani companies as collateral for margin loans to its private banking clients. Until recently, some of the same securities were given a 75% LTV by the bank. As a result, Adani's heavily leveraged empire just lost access to $2.4 billion in equity. This, in turn, has pushed some of its dollar-denominated bonds into distressed territory, trading below 70 cents on the dollar. Any rating downgrade will be catastrophic. In the meantime, investors who got their money back from the powerful mogul will have little cause for relief. The Adani tremors will continue to travel back and forth between India and the rest of the world. Abu Dhabi's international holding company has injected money into the group in the past, and the meteoric rise of a previously little-known company that is traded in fish farming, food and real estate, according to the Financial Times, has accurately reflected that of the Adani flagship. Will the correlation hold on the way down? Even for Indians who do not own Adani Group shares, the health of their portfolios is now at stake. As credit demand increased in the economy following the post-COVID-19 reopening and lending rates firmed faster than deposit rates, local banks have been standout performers. The Adani saga could reverse that. Overseas hedge funds are already calling dealing desks of Wall Street firms, asking how they can short Indian lenders, a Hong Kong-based banker told me.